indicators to come together and analyze markets, make euro-US dollar pair. Now that's well and good for history. You can look back and say, okay, well and good, but what about today? What's happening now? So we're going to cut this lengthy period down here to 3 months. That's the chart that you have for 3 months. You can see there the trends and so forth. I'm going to now apply a couple of properties. The first one being the predicted medium-term moving average crossover. In this case, the predicted medium-term moving average crossover is that blue line that you see. The actual moving average, medium-term moving average, is the black line that you see there, and the blue line is here. The crossover points are some key points, key indicators of what's going to happen potentially with the trend and the trend changes. Now these are kind of some standard types of things that you find with moving averages, but note that when you look at this blue line, it has turned here before the black line has turned. In fact, it turns in some cases several days before, so you get an early jump. In this case here, we have a couple of days, 3 days almost, before the actual moving average begins to change. Now this is one of the examples that we have of a market that shows a nice trend on a moving average. You might want to say, okay, well, how does that look like when we compare this to the the U.S. dollar? Put the U.S. dollar up, and it looks like I jumped ahead a little bit more here with the properties. I don't want all these properties here. Okay. All right, and we need to switch here. I want to come back out of this one because I need to show you I was going to show you the U.S. dollar versus the euro, and I have my looks like I have my markets out of order here a little bit. There's where we have the U.S. dollar. Let's try this way. Okay. Now you can see Euro FX, the contract on on the right side, what it looks like, and you can see the U.S. dollar index on the left side. As I mentioned, you have a pretty distinct difference there in the way the markets are moving, and that's what you would expect. It's a mirror image of one another. So you then have to determine of these various moves, which contract are you going to trade, which side of that are you going to trade, and then how are you going to trade that. I'm going to go back to our previous group and go back to our Euro-US dollar pair. A couple of things about the Euro and trying to determine if they're going to trade them or not. You might want to know a few things about that. So we're going to go into the properties of Vantage Point and kind of look at a few details here. As we mentioned before, the full-size contracts, when you're talking about the 100,000 units, we're talking about 100,000 euros here, so that the value of 1 pip is $10. Makes that pretty easy. That isn't the way all the currencies are, but that's the way it happens to be with the Euro-US dollar pair. When you look at the intermarkets, you will see that there's a heavy influence by the other currencies, but you'll also notice that there are some interest rate contracts that are in here that are among the 25 markets that are influencing the value of the Euro-US dollar pair. You have for example, Freeport, McMoran Copper and Gold, a company, several companies in there. It has been found that these companies and these contracts here are heavily influencing the Euro-US dollar pair and will influence the predictive data that we were talking about before by intermarket analysis. A couple of other indicators that I use is, going back to Vantage Point, is that I'd like to use the predicted differences, as they are called. And the predicted differences are a very useful tool in terms of indicating momentum of the trade. The predicted differences are on the bottom part of your screen here, and you'll notice that we have I'm going to switch over to another screen here and show you a little bit more in detail how we look at those things and what they tell us, because it's very interesting to see some of these indicators and how they operate and what they tell us. Okay, we now have the let's see, I'm going to share. Okay. We now have a situation here where we have the euro-US dollar pair on the screen. We're going to mark it up. And the first thing I want to point out is the line that you see here, the gray line at the bottom of the screen. That is the predicted neural index. The predicted neural index is a vantage point tool that compares two 3-day moving averages to each other, and it forecasts whether the price, the typical price, will be higher in 2 days or lower in 2 days. If that indication is higher in 2 days, you will have a reading of 1.0, which is bullish. If it is lower in 2 days, you will have a reading of 0, which is bearish. So that's the first clue that you have as to what the market might be intending to do, because you have to look at what the short-term forecast, you like to have that be on the side of the trade that you'd like to make. Now also, you need to look at the kind of the angles here, the relationship to each other. In this case here, you can see that the market was trending sideways. The predicted difference lines were moving sideways. You aren't seeing a whole lot of action, which means that the momentum is not showing a whole lot of strength or weakness for that matter. And you can see on the chart above, that's kind of the situation there. We're going to analyze this chart in a little bit more detail later, but just to point out that sometimes your best bet when you're looking at the market going sideways and you don't have some conclusive evidence, it is probably better to sit on the sidelines and not attempt to trade a market that is not trending or not going in the direction that you want it to go. So you have those things to consider as you look at those. The important part of the predicted differences also are the points at which you have crossovers, where the predicted medium-term moving average difference is moving above the predicted long-term moving average difference. Now the predicted medium-term difference is the blue line, the predicted long-term is the green line. When the blue line crosses above that green line, it indicates that momentum is picking up. The short-term push is higher. Obviously, as you know from other indicators, the early boosts that you get from a bottom situation, top situation, kind of wears itself out. It doesn't take a whole long time, and all of a sudden you have a situation where it kind of starts to flag itself a little bit and wane. That's kind of what you get with this kind of an indicator showing the influence of momentum on the trade. Secondly, you have this